Let's begin with NVIDIA's quarterly beat. AI chips fueling a 78% jump in revenue. Current quarter sales guidance also above consensus. Jensen Huang calling demand for Blackwell, quote, amazing. Take a listen to what he told John Fort last night.
Feelings about Blackwell is better today than it was at last quarter. And the reason for that is because we, of course, ramped up into production. We exceeded our target. And the teams did an amazing job. As you recall, we had a hiccup in our design flaw in Blackwell that we found early on last quarter or quarter before that. And we recovered tremendously well, and I'm very proud of the team for that. And so for those reasons, I feel pretty great from an execution perspective.
A lot of desk notes on it today. Jim Goldman says, quote, good enough.
Yeah, I mean, Ben Rice we were going back and forth this morning, and you could just say, look, it was a quarter, frankly, where it's a GPU business, and the GPU's number were beaten. I think that one of the difficulties of understanding it was the whole China stuff. You can get involved in the weeds with China. What matters is that the Chinese initiative is child's play. DeepSeek can't do it. I think everyone has to start thinking what Blackwell does. Is it reasons? So if you go on to ChatGPT right now and you say, is Walgreens going to get a bid from Rob Sweeney at Sycamore? It would say Sycamore is a company that does retail. Rob Sweeney used to work at Goldman Sachs. Walgreens is run by Tim Wentworth. And you'd be like, well, that's particularly worthless. Well, what he's talking about is it's going to be reasoning. It's going to say that's a possibility. It might happen. The balance sheet is not that good.
It might do what I do.
Oh,
so
my
I'm
God.
Yes.
Your name is?
I'm completely replaced.
Right. Mr. Blackwell,
Mostly
how are
dead.
you?
Actually, now today it's alive.
On the one hand,
now
Jim,
they may split it into three once they actually are succeeding in buying it, although it's a few weeks away. I'm not talking about Walgreens right now. Let's get back to NVIDIA.
Well, I'm just saying, okay, that it's maybe John did a great job, and it's really important to try to figure out what happened with the narrative. When I speak with the company, the narrative was, frankly, they were shocked that China DeepSeek would have played any role, given the fact that all the big hyperscalers had placed all these orders. They all knew about DeepSeek. They're much more into another world, a post-train world. They're literally in a world where they want to have a robot. A robot comes into a warehouse, and the robot looks at the warehouse and says, you know what, I got to put this on a truck. I have to go around this corner. I have to lift it up. I got to be very careful. I don't want to damage the box. Whereas right now the robot says, tell me what to do. The next robot says, okay, here's how I'm going to do it. And that's where we are. And that takes it to a whole different level of compute. And Jensen keeps using the term compute, meaning that, look, we don't just, remember, they're both accelerated computing and generative AI. The compute is so fast that they can actually do things. Right now, Jensen's famously saying it's so slow. I mean, to us it's fast, but it's a parlor game to him. And this is something that's industrial and will replace all of every bit of computing we have right now.
Meantime, as they move past this, I think they called it a hiccup regarding Blackwell.
Right.
Once it rolls, though, Jim, is this margin guidance into the mid-70s?
71.
It's good enough?
I think that it'll be even better than that. You know, if you go back, one of the ways to look at, and this is one of the things Jensen told me, if you go back to last year at this time, this week, and you looked at what the stock traded at on forward earnings, it traded 19 times earnings. The stock always looks expensive, and then when we get there, the stock turns out to be very cheap. So I could argue if this stock, you give it a high, you can put a higher multiple and you get to 150, 160. But David, one of the problems is the number of ETFs.
On that point, by the way, on the valuation point, no, don't be worried. I'm just going to interject here.
Don't hurt me.
I mean, Citi, I would never hurt you, Jim. 163 price target at Citi, for example, is 23 times calendar year 26.
That's very wise person. That's exactly what I'm saying. If you looked at it last year, you would realize, holy cow, this stock turned out to be very cheap. Now, this is with a hiccup. This is not, this is not a smooth thing. By the way, the number of factories that are involved, the number of companies involved, the number of touches, this thing is monumental, and it's obviously very big, and Jensen's still able to pull it off. I regard it as a great quarter. I thought it was
what do you make? Quarter. There is, I think, the herd on the street, I'm not sure, but a couple of things that, well, as inferencing becomes even more the focus, so to speak, there are going to be other competitors in a way that there weren't for the training models. Well, you buy into that?
I just think you have to keep coming back to the software in the stack, and you have to come back to the accelerated computing. No one's even near as close. I mean, 25 times. They think that DeepSeek is 1/25 of the speed and power of Blackwell. And Blackwell, by the way, they have the next iterations coming later this year, Rubin next year, and this is going to be a much smoother ramp because the chassis is the same. So that anybody who thinks that, because I asked them, I said, guys, after what happened, isn't it just could be a disaster, right? And he said, no, we had to get the chassis right.
After what happened, what do you mean when you say after what happened?
Oh, well, the hiccup is they moved from one particular chassis. You have to imagine it like a truck, one particular chassis to another, and it was very hard. They misread how hard it would be, but everything else is going to be based on that same chassis, so you're not going to have the same technical difficulties.
Okay.
Look, I mean, if you think about the fact that they're talking about a lot of industrial uses, they're talking about Omniverse to Omniverse is difficult, but you build a small computed factory. You make all the changes in the factory, and then you build the new factory. That is one use that they're really highlighting. They're highlighting a lot of healthcare uses. What's lacking is they did not talk about use cases. That's for GTC. That's the Woodstock of AI. So otherwise, you're kind of left there thinking, what's going to happen?
Right. So we do have some catalysts coming up in March.
Yes, we do. I was at a really terrific fundraiser last night at for the Baby's Heart Fund, where my wife who lost a child, and I was talking to Dr. Pettit, who's really one of the foremost pediatrics. I said, what is this going to be like 3-5 years from now? And he said, well, what you'll do is you'll say, well, we need a new heart for transplant, and you'll talk to a machine and say, we need these dimensions, and it'll spit out the heart. And I said, well, there you go. Use case. We don't have these use cases because we're so busy focused on the darn hyperscalers.
Well, what do you think's holding them back from being that aspirational?
Too quick. It has to be faster. We have to go even faster and faster. They kept talking about speed. No one's listening. We're all listening to whether China's going to get the orders and China's going to beat us and what's the president going to do. But the issue here is if we can get speed, then we can do something like a baby's heart. I'm just giving you a use case that's so insane.
It's so insane. I mean,
but
it seems
you
almost
have to
impossible
think.
to imagine.
But we can all just say that it's not
exponential
Alexa.
rate of change is something that I think the human brain has a hard time embracing.
And that is exactly where Jensen is that we're not. He can think of these things. I know it sounds ridiculous, but like Jonas has a piece today about must be able
he
to
talks
do this.
about going to London and riding in a robo, not a Tesla, but a robo-taxi.
But I just find, look, I don't want to say that we're pedestrian thinkers. I will say that I am not able to comprehend the things that Jensen is.
Right. All right. Well, the amount of compute then needed is just going to continue.
You need so much compute to be able to do a heart.
And by the way, to come back to it, you need so much power.
Right.
So much power.
Oh my God! And it has to be cooled. And then we go all the way back to the GE Vernova. Here we come again.
Well, yeah, of course, but so many different things, and the announcements every day, and whether the power is really going to be there, even with the potential deregulation that may take place in the Trump
whether we're
administration.
overestimating the need for power.
Or then the others who contend. We have a couple on our air to say this has all been overhyped. And ultimately, the use cases are just not really there, and it's not going to actually give the enterprise what it really is looking for in terms of the spend.
If you aren't a big thinker, I'm a pedestrian thinker. I can tell you whether NVIDIA is going to go to 135 versus 134. I cannot tell you what I could do if I had that compute power. Like if you go to Jensen's office, he's got this picture of a rocket, they're basically going how fast it has to go to hit Mars. And he's trying to figure out at what point it has to go to 1 mile and then reverse. And I said, what are you doing with that? He goes, well, I'm just calculating how quickly it has to go.
Is he asking what you do on Mars once you get there?
That would be that's what we think of. Yes. But what he's thinking of are things that, you can't think of. When he had those dogs eating the Jell-O, and then when they picked up the Jell-O and they got it right, and he gave the dog a treat, the machine dog. Like what? I said, what are you doing? Dog, and I said, but at all times you feel incredibly stupid. And he doesn't mean to have you be stupid. But look, we can't. Our brains aren't big enough. All right, our brains are not big enough.
All right, let's turn to shares of NVIDIA this morning. They're turning lower. They were up in response to the quarter, but they did turn lower once the market, I think, started to really digest the potential prospects for 20% tariffs on imports from China. Here to help us break things down is D.A. Davidson, Gil Luria, and Kenner Fitzgerald, C.J. Muse. Gil has a 135 price target. He's neutral on the stock. C.J.'s at $200, and as you might imagine, given that price target, as an overweight. Gil, let's start with you. tariffs are making you look smart right now, but I wonder, what do you take away from the quarter that didn't give you perhaps more confidence in the stock and the performance in the future?
I actually don't think this has a lot to do with tariffs. The stock was already down also after the close yesterday, because this is as good as it gets for NVIDIA. Their big customers increased their spend the most into Q4 as they ever have and probably ever will. 2 of their 3 largest customers have said CapEx will be flat into the first half of the year. It's as good as it's going to get in terms of China. Whether or not tariffs matter, there will be more restrictions on sales of chips to China, so those sales are going to be under pressure. And then it's as good as it's going to get in terms of margins. With their current accelerated product introduction cycle, every time they get to 75% gross margins, a new product's going to drag it down back to the low 70s. So they've done phenomenally well. They're still doing well this year, but this is probably as good as it's going to get.
All right, good as it's going to get, says Gil. CJ, what's your response?
Yeah, I think it's a thoughtful view, but one that I completely disagree with. We are in the first stages of the Blackwell ramp. They were able to ship $11 billion in the quarter, or 1/3 of total data center revenues. And that's the fastest ramp in the company's history. I think very importantly, they are supply constrained. I think part of the gross margin miss is the fact that they have these supply chain issues. Also, pricing from TSMC went up on Jan 1, so they have to mitigate that. But if you think about this Blackwell product cycle, I think you're going to get a July quarter where you get a re-acceleration on the top line. And then we're going to go into Blackwell Ultra in the second half. And then we're going to have Rubin very quickly in the first half of 2026. So I think the data center growth story is robust. I think gross margins will push to 75% exiting the year. And as long as they continue to deliver more and more value, drive down the cost of compute, I think that enables AI to become more ubiquitous. Data center will grow again in 26. And the moment the market has conviction on that growth in 26, stock will continue to work.
Yeah, I mean, I notice you have a $6.80 earnings target for calendar year 26, but you say, and people can back into a multiple from there. But CJ, you say as well, clear upside to $8 or more when all is said and done. What does that mean, when all is said and done?
If you can get to the 300 billion kind of number for next year, that's where, we would underwrite that larger EPS number. But I think very importantly, if you believe in the 650 to 7, you're buying a stock now at less than 20 times next year's earnings, which I think is incredibly attractive. I would say, though, that the main question out there is just whether 26 will be a growth year or whether we will have a digestion year. And, I think we'll have visibility to that around the late May, June timeframe, given kind of 12+ month lead times for Blackwell. And so I think Computex Taiwan will be a very important kind of inflection point where I would expect Jensen will keynote again and that he will offer a view. And I think the moment the market kind of can underwrite another growth year is when the stock can work again. Because quite frankly, the report we got last night was basically in line with buy-side expectations. So what we want to see is that accelerating second derivative and really start to see upside to numbers. And, that's going to be the second half of 25 and into 2026.
Gil, what do you think about 26 in particular, as CJ just said? Growth year or digestion year?
It's far more likely that it's a digestion year. To get to CJ's number, you need to add $80 to $100 billion next year, with at least 2 of the customers already telling us they're probably at plateauing in terms of CapEx. Microsoft and Amazon have already said it. Google will probably say it by the middle of the year. So without their biggest customers increasing spend probably at all, it's very hard to see them adding $80 to $100 billion of revenue next year.
Shares of NVIDIA down over 3.5%. This after, of course, results, which were fairly well received, but perhaps the headlines involving an additional 10% tariff on imports from China pressuring the shares. Let's go over to John Ford, of course. Important conversation that he had yesterday with CEO Jensen Huang. John.
David, yeah, I mean, NVIDIA beat on the top and bottom lines. Revenue was a beat by about $1 billion. The guide on revenue was a beat by about $1 billion. Data center beat by close to $2 billion. But China sort of an issue here. And of course, there are the export restrictions already. There were some hopes that the Trump administration might do something different with that than the Biden administration have done, but perhaps these reports about further tariffs on China dimming that. I asked Jensen about the amount of revenue that they're getting out of China now, and also whether those export restrictions themselves are actually working, or if software workarounds like DeepSeek are evidence that they don't. Here's some of what he said.
Our percentage revenues in China before export controls is twice as high as it is now. There's a fair amount of competition in China. Export control and otherwise, Huawei, other companies are quite rigorous and very, very competitive. And so I think that ultimately software finds a way. Maybe that's the easiest way of thinking about it.
David, a little Jurassic Park reference there, perhaps.
Yeah, I get it, right? Life finds a way. You know, John, on the tariff issue, I mean, you brought into focus, I think, the correct one, which is will the restrictions on low-end chips continue or even go even lower, because it's not as though they're importing a lot from China. Obviously, their manufacturing capacity is largely in Taiwan.
Right.
I mean, do we think that's fair, though, to say that is and how much of a concern that is for him?
Well, it doesn't seem to be that big a concern in the sense that China revenue, what they're projecting, what they're guiding to, is that the percentage of revenue coming from China is going to be stable. Part of what he was saying is that before there were these restrictions, the percentage revenue coming out of China was twice what it is now. And of course, NVIDIA said that they're going to abide by whatever export restrictions. But if you zoom out a little bit, something else coming out of China, not tariff affected, is DeepSeek. And NVIDIA stock did get impacted when the initial news of that model out of China came out. And there's been a lot of talk. The initial assumption was, boy, DeepSeek can run on lower-end AI-related hardware. So is that bad for a producer of premium hardware or premium systems like NVIDIA? And really, Jensen argued the opposite, that because DeepSeek is based on breaking down these problems, AI-related, into smaller pieces and reasoning through them in the longer term, that could mean more demand for compute resources. Here's what he said about that.
We're just at the beginning of the reasoning AI era. This is the time when AI is thinking to itself before it answers a question. Instead of just immediately generating an answer, it'll reason about it, maybe break it down step by step. It'll do maybe some searching in its own mind before it creates and composes a smart answer for you.
And I might argue, David, that we saw a piece of, it's not exactly apples to apples, but Andy Jassy was in town yesterday with the launch of Amazon Alexa Plus, and Alexa working differently now, pulling on different models from across the spectrum to answer questions. And it's conversational. It's more breaking things down piece by piece and how it responds. The argument being, well, if this works better, if it's more conversation, people are going to talk to it more. They're going to use more AI resources. And if NVIDIA is more powerful and more efficient, then NVIDIA ends up being in higher demand, David.
Yeah. I mean, there's no shortage of potential competitors when it comes to inference in particular. John, do you think, based on your own knowledge/reporting as well, that any of them have a real chance here in terms of taking significant share?
Well, it's hard to count anybody out because we're not just talking about hardware innovation here. We're also talking about software innovation. And part of what NVIDIA has in its CUDA software and platform is backward compatibility with earlier versions of chips that they've come out with. And if you think about it this way, it sort of allows, how you got an old iPhone, you might hand it down to your kids, and maybe they aren't using it for the same higher end type work things that you were using it for when you first got it. Maybe they're playing games on it, but it's still good enough for that. Well, that happens in data centers too, right? Companies might start off using these things for AI, But then as the systems get older, they still need them for video processing, things like that. So they hold on to them, keep them. It's still useful. And so it's useful for them to stay within an NVIDIA ecosystem. That being the case, if the performance is valuable, if there's a longer valuable life of the systems, and they've got this software underpinning, it could create a moat similar to what we've seen in the consumer world with Apple and iOS. We'll see.
You do have the NVIDIA aftermath, Josh. The reaction seems to be not a blowout. Demand is still strong. Deutsche Bank says a modest beat, nothing spectacular in terms of guidance. Is that why the stock looks like that?
Yeah, I think that's accurate. It's a beat. It's just not like the craziest beat ever. And understand, we're talking about like a company that over the last 8 quarters, they not only blow the numbers out, then they give guidance that's so far above where the median sell-side analyst is on consensus that it's almost like the analysts have been panting, running behind this stock, trying to keep up with it. Obviously, a phenomenon like that can't last forever, and ultimately it's going to run its course, but that should not be interpreted as these are bad numbers or there's something wrong with NVIDIA. The company is executing on its growth plan for this year. We've got confirmation from their 5 biggest customers that the spend that was in the numbers is going to happen. And then Jensen comes out, and with the cherry on top, he gives you like 10 unsolicited minutes at the end of the call about how bullish he is because of DeepSeek, which, if you remember, was the proximate cause of the sell-off that we had in January. So I think it's really as simple as, okay, it's a beat. It's just not the same kind of beat that we saw last quarter, the quarter before. But the market's digesting it, and I think ultimately the stock resolves higher, not lower. And I think for people that don't own the stock, today is a great day.
All right, Malcolm. I mean, you don't own the stock. You look at the price action. By the way, it's great to it's great to welcome you to our investment committee. We're happy you're here. You don't own the stock. You acknowledge that you missed it. You got a little discount today, and the stock hasn't traded well lately at all. How do you see it now?
I think realistically, all of the real sellers are out of that stock already. I think DeepSeek was January 25th, 26th, something like that. I think that revelation really pushed out anybody who wasn't extremely bullish on this stock. So maybe you see some people taking some profits where they feel like they need to. But realistically, this sell-off that we're looking at right now, I think DeepSeek did this earnings report a favor. It basically pushed out anybody who wasn't a serious holder of those shares and made sure that if we did get any negative news about Blackwell, which we didn't, we actually got positive news about Blackwell, right? Sure. $11 billion of their $48 billion in the quarter were attributable to Blackwell. And on the call, Jensen says, this is the fastest uptick we've seen with any new technology we've rolled out. So I think there's reason to be optimistic if you're a long-term shareholder. But for anybody who is just trading it for the sake of trading it, that's probably the little bit of a downtick.
What if you're not a shareholder like you? I mean, At what point do you get interested?
I think the train has left the station. That's been my stance on NVIDIA for quite some time, because it does look like we're probably dislocating from really positive demand, really positive, we're 12 plus months out really from where they're able to meet demand. So they've got orders a year in advance. But I think the stock itself might become a little bit pulled apart from the story. And that's what I worry about as a potential shareholder. Okay,
Bryn, what's your take? Longtime shareholder as well.
I mean, the call was so great. It was a great call. And if you look at this stock on any metric, PE, PEG ratio, this is going to end up being 12 months from now. If you look at a Ford PE, PEG ratio, et cetera, probably the cheapest of the Mag 7. You look at Microsoft at a 30, Apple at a 30, not even remotely growing at the rate that NVIDIA is. And I just think you have this visionary leader that's with Jensen looking out so much further than we as investors or as just individuals can see. And I think that today we continue to get data points that this AI transition is going to be a secular trend, not just a cyclical trend. I think it's interesting. I mean, the stock is firmly in that 8-month trading window between 115 and 150 at the high. So I think we're going to still be in this trading range. But to your point, Scott, this is a great opportunity to start buying this name if you haven't owned it, because the call was just exceptional. 70% margins, that's probably going to go a little bit higher. Just so much growth trajectory, and I just don't see any competition from them.
Rob, it's funny. The sentiment around the name has changed a bit. I feel like after DeepSeek, the market is more looking to poke holes in the story than it has in maybe the last 12 months, at least. So maybe despite what has been deemed to be a great call from these guys, and by all accounts, good numbers. It's not like the guidance was bad. It's just the street has a different bar after DeepSeek.
I think the street's wrestling with something else on all these businesses. They're focused on the change in the second derivative, the change in the rate of change. So they all have terrific numbers, but they're not as terrific as they were. But on a relative basis, they're still much more attractive than almost anything that you could buy out there. You are able to buy, and this is why we increased our position last week, Scott. We're still underweight NVIDIA, but we've been buying. As you know, we started buying in the 90s. We bought a little more on the last dip. We bought a little more on this dip. And the reality of it is I think when investors step away and they're done wrestling with the slowing of the second derivative, they're going to look across the markets and realize that the fundamentals of these businesses, most of these businesses, their earnings have caught up. They've lowered the pricing, as has happened in NVIDIA. It trades at 28 times right now. It's the cheapest it's been in a long time. To Bryn's point, it's one of the more attractive. Yes, Facebook is more attractive. Yes, Google's more attractive. And the reality of it is once we get this macro headwind, it's not in a downtrend. These stocks, as Josh will tell you, they're still in an uptrend. It looks a little shaky. They've lost some of their momentum, but the fundamentals are still intact. And I think if we do get a little more of a pullback, I'll disagree with Malcolm a little bit, this train has not left the station. It's left the station if there's some shock to the ecosystem, sure. I don't think we're seeing that yet. You saw the news from Meta the other day.
Yeah, to that point, like this is nobody is overpaying for NVIDIA right now. 28 or 29 times forward PE. Keep in mind, over the last 5 years, the stock has sold at an average PE of 42 times forward. And actually, if you go back to January of 2023, at the dawn of this whole AI era, it was like a 90 PE, which people were screaming how expensive the stock was. Then it 5x'd because PEs don't matter, but that's another conversation. Right now, you are paying a below average PE over the last 5 years for this name. And if anything, they've earned a higher PE than the market just because of the degree to which they're executing. They haven't had a downside shock. But they haven't had a guide down.
That goes to the point I was making about DeepSeek doing them a favor, right? So they had a 40x multiple on this year's earnings coming into the year. DeepSeek happens, the shares sell off aggressively, and it brings that valuation down to about 30 times. Now we're below it with the sell-off today, and I think that gave it that cloud cover for this earnings report to not have to be as good as expectations would have been had DeepSeek not happened and the shares sold off. So all of the sellers who really wanted out of that name are already out.
It's a good point. Went into the numbers in a 12% drawdown. Did not go into the numbers at an all-time high.
No, but you know what? Of late into the number, yesterday into the number, the stock was up 4%. So it was trying to be as optimistic as it could be going into the number in the face of what had been not so great. I mean, it's down 14% from its January 7th high.
That's fast money, though, Scott. That is not real investors. I think real investors look at this as an opportunity. They're just trying to make sure that there's not some big massive deceleration in cap spending, which, again, there's no indications that that is happening.
No, but the other
why
stocks,
not be certain about that?
It's because now we're going to turn to NVIDIA, which would like to be more able to sell more of its chips to somebody, arguably an adversary, which is China, but it's also running into export controls as well. Christina Partsenevelis, as alluded to, is looking at that angle of the NVIDIA AI export story.
Well, Dom, NVIDIA is really walking this tightrope with export controls. You got balancing compliance, profits, and competition. And I'll get to that. You guys just talked about it. On last night's earnings call, CEO Jensen Huang noted China revenue has dropped to half of pre-export levels. Sounds great. But that still means $17 billion, according to their annual report. That's 13% of total revenues. That's now at risk if new U.S. restrictions take effect. Export-compliant chips, that would be the H20s, have been NVIDIA's China lifeline, generating an estimated $12 to $15 billion in 2024. Keep in mind, NVIDIA doesn't break it out, so this was according to analysis, Chinese customers continue buying them up, especially since DeepSeek gained global attention. But if banned, NVIDIA could lose billions of dollars annually from China. Its global dominance, yes, and new Blackwell line will definitely soften the blow, no doubt. But the real question is China's response. Will they keep buying these cut down or watered down chips, or shift to domestic alternatives? Huang himself warned competition is growing in China, with Huawei now listed as a competitor in their 10K for the second straight year in a row. It hasn't been listed in over 5 years. Most analysts believe NVIDIA's stock already factors in future export controls, which is why you've seen it come down, been range-bound. Mizuho's Jordan Klein, though, says shares have been de-risked, while Citi expects China restrictions and semiconductor tariffs will keep this stock range-bound for the next little while. The real long-term threat, though, isn't just today's revenue hit. It's NVIDIA's potential, or the fact that NVIDIA could potentially lose its foothold in the world's largest semiconductor market, just as local competitors gain momentum. So all of what you guys just spoke about, Dom, too.
All right. So Christina, how big of a threat is the domestic chip-making market within China compared to NVIDIA? How long do folks think it will take before it really becomes a situation where there is a viable competitor, real viable competitor to NVIDIA's dominance?
Well, factor in when Biden put in place these rules, which was in 2022, when you really started to see the beginning of it, and then factor in, and that's when Huawei was banned as well from just any type of relationship with the United States. You've already seen it grow. I saw one stat about 60% of the market is coming from Huawei chips, so it's growing exponentially faster. And that's the argument against export controls. If you add these export controls, it's only going to help the homegrown markets grow stronger and larger and faster, and then it really isolates each country. NVIDIA's argument is that their chips are better quality, but then you bring up the whole DeepSeek argument. Hey, DeepSeek was using H800 chips, which are not as high-end as the other chips that are available on the market now with Blackwell and stuff, but they were still able to provide incredible compute. And so that's really going to come into play in the near term. No doubt China's growing, and that's the biggest argument against these export controls. You're helping the other guys get better.
How long will it be before a homegrown Chinese chip company becomes a true competitor to NVIDIA?
Sure. So I think let's quickly review what we heard last night. Number one, demand for NVIDIA's products is exceptionally strong. So even though the sales to China as a proportion of their sales have come down, but look at how much the US hyperscalers are spending, look at how much the European Commission is planning to spend, look at how much France is planning to spend. Number two, the technology transition that we are going through, which is a move to inferencing of these new reasoning models. The computing intensity required to process these models is going up by a factor of 100. Right? So this whole DeepSeek moment has actually energized a lot more spending rather than less spending. So demand environment is very strong. The technology transition is working in their favor. And now they're starting to ship their Blackwell product, where shipments in the last quarter were twice as what we had estimated. So I think that's the good news. When it comes to competition in China, the thing to keep in mind is that as much as about 14% of their sales are exposed to China, it's spread across gaming, across automotive, and across data center. What they're shipping to China are very low-end products that in the majority of cases are being used for a lot of consumer-grade applications. So I'm not surprised to see competition come up in China, but the one other point to keep in mind is that the advantage of using NVIDIA products is that they're already certified to work with a lot of the Western large language models. So it's a really turnkey product that whether it's the customer in China and Europe and the US, they feel very confident in buying because they know they have the full weight of the software and the developer ecosystem behind them.
So Vivek, do you stay bullish on NVIDIA, kind of the broader space? Would you make any comment that would extend so far as those who are supplying power and, data center support and all the rest of the daisy chain?
Yes, I think that, from what we have heard from the company, and more importantly, what we have heard from their customers, whether it is Microsoft, whether it is Meta, whether it is Amazon, they were all aware of the innovations that DeepSeek spoke about. So DeepSeek was actually more of a surprise to Wall Street. It was not a surprise to the technology industry. This is all in the open source. And after hearing that, the customers are still planning to spend a lot more. I think that's the most important aspect of this narrative, that the demand environment is exceptionally strong. And now you have a stock which is growing 50 to 60% a year, which is twice as fast as, by the way, how their customers are growing spending, and is trading at less than 1 times their earnings growth. Right? If you look at the S&P 500, or if you look at the other Max 7 stocks, they are trading at 2 times their earnings growth. So from that perspective, we think NVIDIA is very compellingly valued. But at the same time, what happens is that every time the company reports a few days in advance, expectations go up. So, we go through this kind of same song and dance about expectations. And to be fair, the product transition that they are going through for Blackwell, they were able to deliver a lot of product, but the initial ramp-up costs are high. We think these are short-term issues. As we get through to their GTC conference and then to the back half, we will start to see their margins expand. And I think that's going to help re-energize the stock. So we took up our estimates and we took our price target to $200.
Okay. Why is NVIDIA down 6% now?
Well, it really shouldn't be. I think they reported and guided actually better than people's expectations. The only nitpick would be the gross margins. And quite honestly, that had been telegraphed, from almost 3 quarters ago. So I think it's down more so because the jitters in the market versus it being NVIDIA specific. And there is a rolling off of the momentum trade. NVIDIA is pulling back with it.
Joe, are you surprised?
No, I'm not surprised. We spoke yesterday on halftime about what was being reflected in the option market. It seemed as though there was more positioning towards the puts than the calls. Let's remember, this is the first earnings quarter that we have had since 2022 where NVIDIA, relative to the prior quarter, was down. It was down 9% since its last reported in November. So I'm not surprised by the price action at all. This is a moderation in revenue growth. That's clearly what it is. Now, the revenue growth is really strong at 78%. We like that. But 1 year ago, we were talking about 265% revenue growth. And if you look forward into the coming year, the revenue growth continues to decelerate. So I often say you can't have it both ways. You can't get exuberant about the revenue growth accelerating, and then when the revenue growth begins to moderate, not understand that the market is effectively going to price that in. I don't think it leads to a massive deterioration. I think NVIDIA is in a sideways consolidation range, but I think you just have to understand it's just not what it was last year.
But nor is the valuation. The valuation has come in as the stock has gone down. It's down at least 14% since its high.
Yeah, but that doesn't give comfort to the overwhelming majority of managers who are overweight this name. They're not sitting there and saying, okay, it's a cheaper valuation, so I'm going to hold my footing here in the position. They're going to reduce the position marginally, and I think that's what's going on.
Well, I mean, you got a portfolio manager sitting right next to you. Are you thinking about doing that?
Actually, I do think valuation does matter.
Mm-hmm.
Everyone knows there's slowing growth. NVIDIA is the dominant compute center that is driving forward this AI revolution. And so valuation does matter. And today, if you look at consensus numbers, it trades at about 20 times, 26. The buy-side numbers are higher than that. It trades at less than a market multiple on 26. And so, we're waiting for the Blackwell launch. I will bet you 2 months from now, as Blackwell starts to launch, everyone's going to get so excited that Blackwell is launching and these big numbers are going to put up that all of a sudden that 20 goes to something higher.
Don't disagree at all. And I agree with you. Valuation matters when you're thinking about investing for the long term, but trying to explain the dynamic of what we're seeing today, valuation is not in the equation of what's motivating price to move lower today.
Why?
For sure.
Why?
All right, I hope you're all doing well and staying calm in this market. Today was a rough day for stocks. The S&P finished the day about 1.6% lower, and NVIDIA finished the day about 8.5% lower after reporting solid earnings yesterday afternoon. Today, we got more comments about tariffs. This was the first full trading day after the president announced a 25% tariff on the EU yesterday, as well as another 10% tariff on China. We also got some tense tariff comments from Canada's Trudeau today. Market participants are not happy about the tariff situation in the short term, and it is weighing down on the market. Also tomorrow, we get PCE. Remember that PCE is the Fed's preferred metric for gauging inflation, and so that could also be a reason why the market sold off so precipitously into the close today. Now let's talk about NVIDIA. First, let's just cut to the facts. NVIDIA reported a fantastic quarter, beating on both the top and bottom lines, giving next quarter guidance above consensus at $43 billion, telling us that the Blackwell ramp is going faster than we thought it would, and that they brought in $11 billion in Blackwell revenue in Q4, which is much more than the several billion they told us to expect. And they addressed concerns about things like tariffs, export controls, and DeepSeek head-on, communicating that DeepSeek is actually great for NVIDIA and that they are not concerned about the geopolitical or international trade situation. We were also told that Jensen Huang's keynote at GTC on March 18th will be a quote news-packed event where we will learn about Blackwell Ultra, Rubin, and the next clip of product after Rubin. For all of those reasons and more, it really was a great quarter for NVIDIA. One issue that some investors were unhappy about was NVIDIA forecasting Q1 margins around 71%. But this is nothing to be worried about. NVIDIA leadership told us that margins would come down slightly because they are, quote, expediting manufacturing to ramp Blackwell faster. And they expect margins to return back to the mid-70s in the second half of this year. Margins will go back up later this year, and Blackwell is going to ramp up faster than it otherwise would. That is great news. And then the very next day, after the company reported great earnings, the stock closes down more than 8%. Look, I'll be completely honest with you. This is frustrating. It is really frustrating. But we need to understand that the price action today is not because NVIDIA missed on earnings. It's not because there are any cracks showing up in the thesis behind NVIDIA. And it's not because demand for NVIDIA's product is waning. None of that turned out to be the case yesterday. In fact, it was the complete opposite. NVIDIA is absolutely crushing it right now, and things should accelerate even more later this year as Blackwell ramps faster and as margins eventually return to the mid-70s. As I said many times before this earnings report, I'm actually more optimistic about the quarters NVIDIA should report sometime in May and August, because those are the quarters where Blackwell earnings should really show up in a substantial way. And I still hold that view on the situation. Also today, we got yet another reaffirmation that demand for NVIDIA's products is not slowing down anytime soon, with OpenAI's Sam Altman posting on X saying that they are, quote, out of GPUs and that they will add tens of thousands of GPUs next week. Demand isn't slowing down, it's accelerating, and Altman's post today is just another indication of that. Jensen Huang shared a lot of details last night after the earnings call in an interview with CNBC. If you want to hear what he had to say and hear my thoughts on earnings last night, feel free to check out that video on the channel because Jensen touched on many important topics and he did a great job of explaining things. Jensen highlighted a lot of key points. More efficient models like DeepSeek's or one are actually going to increase the demand for more compute. NVIDIA's products directly contribute to increasing companies' revenue, and Blackwell is ramping well. Jensen mentioned that Blackwell is very complex, consisting of 1.5 million components that are being manufactured in 350 plants around the world. And that's what I want to hit on before we end this video. NVIDIA is no longer just a chip company. It is now an AI platform juggernaut. With the Blackwell ramp up, new software offerings, auto partnerships with companies like Toyota, a competitive moat that no other company is close to breaching, and an expanding product line. NVIDIA has it all, with great financials backing it up. And so in the short term, volatile swings are unfortunately going to happen in the stock, even when it doesn't make any sense. But from a long-term view, this company is a juggernaut that is ramping up what will be their most profitable product to date. They have an important conference in March where they will unveil new products. They're going to start rolling out Blackwell Ultra this year, even as Blackwell is ramping in volume. And NVIDIA's customers are not slowing down on their CapEx plans. Many of them are actually increasing what they plan to spend in order to meet insane demand for AI. In the short term, anything can happen, but from a long-term perspective, NVIDIA continues to execute extremely well, and therefore I expect this company to be worth substantially more in the future than it is today. At least that's how I view this situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.